Thaddeus Malesa from the Qatar Financial Center. Thank you so much for joining us. I think let's start with your latest Islamic finance report, Unlocking Cross-Border Opportunities. Could you talk a bit about the key findings in the report? What's new? What should we know?
Of course. Well, first of all, thank you very much for having me. I appreciate it. Appreciate the opportunity to be speaking here with you today. So we came out with our third annual Islamic finance report. And there are really three big takeaways from this one. So first and foremost is the growth of Islamic finance industry globally.
Yeah.
So we found in our report that it's risen now to an estimated value of $2.4 trillion. And so A, that's a huge market.
Yeah.
And B, Qatar is positioning itself as the Gulf nexus point between Europe and Asia, specifically with Turkey and Malaysia being our partners, to really drive this forward.
Yeah.
The second is looking specifically at how Qatar's size of the pie has grown over time. And so here we've seen a lot of development.
Yeah.
Specifically, we've seen growth of 8% in compound annual growth rate terms since 2015 until today.
Yeah.
So we've now reached $129 billion. So that represents about a third of all financial system assets in the country.
That's amazing.
So that is substantial.
Yeah.
But even more critically, and frankly, that's why we entitled the report as we did, Unlocking Cross-Border Opportunities, is specifically about those international opportunities.
Yeah.
So going beyond Qatar.
Yeah.
And that's where we see a lot of bright spots. And so specifically, there's very strong demand for innovative Qatari financial products, Islamic financial products. And two of them are Al Rayyan's Qatar ETF, and another is QInvest's Sequin Income Fund. So that's attracted a lot of placements and a lot of interest internationally. And we also see that driving a lot more product development for the future. So at Qatar Financial Center, we're very happy and proud to be part of that journey as Qatar expands and becomes more global. And once again, links Turkey and Malaysia, us being that central node.
And so you talked about those two products. Could you maybe share a bit more about how successful they've been and what you've learned from them as you develop more products?
Yes, of course. So one of the top products is the Qatar ETF, so specifically developed by Al Rayyan. And when it launched, on the day that it launched, it dominated almost a third of all activity on the stock market. So it drove a lot of liquidity, and it's actually used by a lot of domestic financial institutions as well as international ones. That itself has also prompted the launch of another ETF that's concentrated on the Qatari market. But they're also, Al Rayyan specifically is using this as an opportunity to launch other ETFs in the near future. One of those might be centered on gold. So once again, I think that this has been a product that has attracted a lot of international attention. It has performed well. And it is also driving further product developments within the Islamic finance space inside Qatar. And also for Al Rayyan itself.
And so let's talk a bit about Islamic finance. So for those here who don't know enough about Islamic financial products, Islamic finance, tell us a bit about why it's growing at such a fast pace. Some people even say that it's perhaps more sustainable than traditional non-Islamic finance.
I think that's a very good point. And I think that's because by definition almost, it is more sustainable. And that's because underlying its provision are these ethical principles that support it. And so the first of those is the promotion of risk sharing between the financial institution and the borrower. The second would be the avoidance of excessive speculation. And you definitely want to be moving away from that in general. And thirdly is the limitation of debt levels to the overall assets valuation. So if you take those three principles and combine them together, it becomes a very powerful proposition. So A, you're looking at risk sharing. B, you're avoiding excess risk in the system. And thirdly, you're looking at limitations of overall values.
Yeah.
And I think unlike conventional finance, Islamic finance also differs in that it's on a profit-sharing model.
Yeah.
And it also requires disclosure of all details in transaction. So I think that also engenders a lot of trust in the system, and we see that in the numbers, and we report that in our report. So we see in Unlocking Cross-Border Opportunities that a lot of non-resident deposits have come into Islamic financial institution inside Qatar, more so than in conventional banks. So it's, I think, because of this trust that's established.
So you talk about trust. Would you say then that Islamic finance is perhaps more recession-proof?
Well, it certainly appears that way. So if you look at international reports and go beyond just looking at Qatar, you see that there's a steady pace of growth in Islamic finance, specifically for banks.
Yeah.
So I think Dr. Bello in the panel that just happened at the Doha Forum today was speaking of 0.8% growth in Islamic banking assets in 2018. So that tells you a lot.
Yeah.
It tells you that it's on a steady, slow-as-you-go pace. Of course, Qatar's Islamic banking assets have grown at a faster pace than that, as I pointed out. But overall, it seems to be almost steady as she goes.
Yeah.
But and there's a lot of, once again, built-in ethical principles that support its long-term sustainability.
What are some of the, with that in mind, what are some of the roadblocks that still exist in developing Islamic finance further?
Well, it was exactly spoken to in the panel by our CEO, Yusuf Al-Jada. And so that is specifically about how we connect these markets.
Yeah.
So at the moment, they're very much disjointed.
Yeah.
And so at the Qatar Financial Center, we are investing in unlocking specific technologies and international platforms to connect these markets.
Yeah.
So once again, we're trying to be a central node connecting Turkey that services the European markets and Asia, serviced largely by Malaysia. And so figuring out how one does passporting mechanisms, how one aligns regulations will really foster those commercial and financial connections that we're seeking to establish.
So with that in mind, looking beyond Qatar, which regions or markets present the most opportunity for further growth in Islamic finance?
Also a good question. Thank you for asking it. So first and foremost, we are trying to make a series of international connections, and first with Turkey, and those deals were signed with the President's office to establish passporting of Turkish companies to be able to come into Qatar. And then also growing our links with participation banks, as Islamic institutions are called in Turkey, and our own. And now we will be shortly focusing on and signing an agreement with Malaysia. Fantastic. So I think those are the two areas, two countries through which we are going to be attracting additional business. But our financial institutions themselves are going out and doing business in a variety of countries. So whether that be in Turkey, specifically looking at real estate or pension provision, or even in Morocco, in Tunisia, trying to help them with launching sukuks, for example. So I think that because of the expertise that has been built up in our Qatari Islamic financial institutions, that is able to be parlayed into these underdeveloped markets and also help us to realize commercial opportunities.
Fantastic. Well, thank you so much.
Well, thank you very much for having me.
Thanks for having me.